the first time at a bank. And so you have to go to a lot of banks, and it's a lot of effort. But if there's nobody there coaching you, and that's what I do, because they call me up, well, the bank didn't give me the credit card. Go to another bank. There's plenty of them out there. I'm here to support you. You fell down, pick yourself up, and go out there and do it again, because somebody will give it to you. Somebody is going to give you that credit card so you can get yourself reestablished.
Because people want you to be able to buy a home. I mean, it's the American dream. Everybody wants to live in their own house. Well, how do we get the veterans, how do we get this 21, 22, 23-year-old that's getting out of the service now into a house as opposed to paying rent? Well, how would you persuade a young veteran?
Most people, whether they're young or old, the biggest problem that people have is that the down payment. And if you don't have very much money in the bank, you know, how are you going to buy anything at all?
But this is zero down.
Zero down. So now we've gotten rid of that. Conventional loans want a reserve. In other words, they want you to have enough money in the bank that just in case you lose your job or whatever, or you can't work for a period of time, that you can make your mortgage payments. VA doesn't require that at all. So you can have $100 in the bank, zero down, and you'll be able to purchase a home. Now there are some closing costs here that you might have to pay, only maybe 50% of them, but we're in a buyer's market right now. And in most cases, I'm able to get the buyer to pay those closing costs that the veteran has to do. So that means zero closing costs, little to no closing costs at all, and the lowest interest rates in America. So if you can get the lowest interest rates out there, in most cases you're going to be able to afford a home that you want to live in, because you know 4.5% is a lot better than 6% or whatever it is out there. But unfortunately, the veteran just can't find a bank, whether it's Wells Fargo, B of A, or Citibank, that's going to help them with that, to be able to make access to this. And so that's what I want to do, is tell them, really stick to your guns. This is the one and only loan that you want to use to buy that home for the rest of your life, whatever it's going to be, including retirement.
Okay, so we've established you can buy more than one home on a VA loan, that it's a lifetime benefit and not just good for 30 years. I was really under the impression that it was, once you got the green certificate of eligibility from the VA, you had 30 years to use that puppy, and if you didn't use it, gone. Wow.
I met my postman one time, and he thought he had to hurry up and use it because he only had 10 years to use it. 10 years for the educational benefits. So like I said, whether you get that from a friend or you just read the thing wrong, whatever it is, you know, that's the problem. Most veterans don't realize that you can buy any kind of a home, including a mobile home, as long as you own the land on the mobile home. So that not just regular single-family homes, but condos and townhomes that you can purchase with this thing. So whatever you can buy with a conventional loan, the VA says you can buy, you know, with your VA benefits. You know, whether it's your first-time one-bedroom, one-bath condo, or now because your family is starting to grow in someone that you need that, you know, that second bathroom. So it's got to be a 3-bedroom, 2-bath, you know, and so on. You can use it over and over again as your family grows. Then the family's gone. You're going to retire. Now you want to buy something to vacation and whatever it is going to be for yourself.
So definitely we would like to encourage anyone out there considering purchasing a residence for yourself or in your family, really think about the VA. But, you know, I bought a house on the Calvet, so can you tell me what the difference is between a VA loan and a Calvet loan?
Good question. I've been doing this for a lot of years, and I've never been attracted to the Calvet loan, you know, for several reasons. But right now, the biggest reason right now is interest rates. Calvet zero down is 6% right now. These are all 30-year fixed rates, by the way. So they're at 6%. Well, VA is 4.5%.
1.5% may not sound like a lot, but over 30 years, that's a substantial amount of money.
It will also make a big difference in what you can buy for a home. You're going to buy less home for 6% because you won't qualify for the home that you really want. You will qualify for the home at 4.5%. Interest rate is really the driving force of what, you know, based on your income, you're going to be able to afford. And speaking of income, the veteran has to make a certain amount of dollars, you know, in a conventional loan or a VA loan to be able to afford to be able to make the loan. Most of the conventional lenders out there want at least 1/3 of your income to go towards all your debt. housing and all your other debt, maybe 40%. The VA will easily go up to 50% and even higher, as long as maybe other issues, including employment and credit history and so on. So that means the veteran will be able to qualify for a bigger, better home with his VA loan than if you went for other loans like FHA or VA, because of the debt ratios are much higher. So it's a pretty risky loan for the banks, but you know, America said, listen, these veterans, you know, really worked hard, you know, to protect us, and we're going to give them, you know, this wonderful benefit out there. And if we have to push the envelope a little bit for them, we're going to do it for them. You know.
Can you tell me how you got into this?
My first VA loan was a family friend of mine that bought his first home out in Concord. I barely knew what I was doing, and that was back in '92. I eventually met my mentor in the mid-'90s, who was really helping veterans out lower their interest rate doing this refinance program that the VA used to have, a streamlined program. And he was really good at it. And I just said, can you teach me how to do it? And within a year, through his mentorship, I started just kind of going off on my own to try and help veterans. And I've been working up and down the state of California helping veterans, you know, whether it's purchases and refinances. And eventually I said, you know what, I think this would really be something that I'd like to tell veterans about. I really would like to be able to do a seminar. I have no background in public speaking, no background in putting a seminar. And back in 2001, I met a gentleman, Dan Conrad, that's what he used to do in his former life. He was a public speaker. He liked what I was doing. He helped me put this wonderful PowerPoint presentation together. He knew nothing about loans. He just listened to me and typed this thing on the computer and helped me create this seminar that helps the veteran understand how the benefit works. And I've been doing this seminar since about 2002 around the Bay Area.
I know one of the things that we talked about before the show was what PMI is. Can you tell me what that is?
In other loans other than VA loans, if you put less than 20% down, the bank looks at that as kind of a risky loan. I mean, our parents more than likely, and grandparents for sure, if they were going to buy a home, the banks wanted 20%. So if you didn't have 20%, you couldn't get the mortgage. Well, the banks thought, well, maybe we can lower that risk for us, and we'll charge an insurance called private mortgage insurance.
PMI.
PMI. So if you put less than 20% down because of the higher risk, we'll let you take this loan up. But that's going to cost you money. For a loan that's about $200,000, that's going to be about $150 extra a month. For a loan that's about $417,000, it's going to cost you almost $250 extra each month. The VA has never charged the veteran private mortgage insurance.
So the VA, once a veteran qualifies, gets their certificate, and says, okay, I'm ready to buy a house, they're not going to get stuck paying that extra fee because it's a VA loan. It's guaranteed by the federal government.
And that brings up a good point, because one of the things that a lot of buyers don't realize is that there's a big difference between getting pre-qualified and pre-approved for a loan.
Can you tell us what the difference is on that before we close the show?
When you get pre-qualified, you're literally telling the seller and everybody else out there that you're a good guy, you make good money, you got a good credit score. Nothing has been verified, and you write a letter and you give that to the seller with your offer, pre-qualification letter. What I do for my veterans is I get them pre-approved. We have no address for the property. The only thing that's missing on that application is an address for the appraiser. But when they present their offer, they say, the only thing that I'm missing on this application is an address to order that appraisal tomorrow. So if you accept this offer, I'm going to order that appraisal, and this loan can close in anywhere from 3 to 4 weeks, because I've already got my paperwork. And most people presenting an offer are just starting that process. So if you get yourself pre-approved, it puts you in front of the pack in terms of presenting your offer to the seller, and it ensures that that you don't have to wait and see whether you're going to be able to buy this home. You already know. All you need is an address, because you've already given them your pay stubs, asset statements, bank statements. All that stuff has been done. All you're waiting for is an accepted contract and an address.
Wow. This has been a really interesting episode, because I've learned a lot of stuff that I didn't know. It kind of makes me want to apply for a VA loan and see what I can come up with.
I mean, this is what happens in the seminar. Veterans come in there and say, oh, I'm going to find out a bunch of numbers and information and stuff like that. But because of all the misinformation out there, and the fact that maybe they figured it's something that I'm never going to use, all of a sudden, whether they use it now, for their first home, they want to move up home, or they're retired and they've always wanted to buy a vacation home, they now have access to something that's going to help them get to that. And so by the end of the seminar, everybody's pretty excited about this thing because it really is a great benefit, for the veteran. And I'm just out there, to help them access it. That's all it is,
So really, you're really empowering the veteran.
It's exactly the word that I use. I empower them.
To consider buying a home and to consider a VA mortgage because it is the best loan in America. I would like to take this opportunity to thank my guest.
You're
and
welcome.
Also to thank the AMVETS California Service Foundation for their ongoing sponsorship of the Veterans Helping Veterans TV series. If you have any questions about refinancing or financing a home loan, please contact Bill and he'll be more than happy to try to answer those questions. Thank you so much. We are veterans helping veterans.